All right, thanks everybody for joining us today. We're really excited for this session. Welcome to the conference. So my name's Phil Reeves. I'm at the AgWest Heritage Capital, joined today with Michael and Todd. What we want to do today is kind of step through a transaction that we've done in partnership with Todd's team, our team, but more importantly, have a broader conversation around employee ownership and the agricultural space. I think a space that we found as a firm really exciting, and one where we think there could be more opportunities for employee ownership. And so first, I want to open it up. Michael, share a bit about AgWest Heritage for those that haven't met us, and then Todd will turn to you after that.
Thanks, Phil. Pleasure to be here. So AgWest and Heritage Capital Partners is a new investment fund. We were stood up 3 years ago, and our goal is to help close the racial wealth gap and the opportunity gap for low-income workers by buying companies from owners who are ready to retire and sell the business that have significant low-income workforces and turn them into 100% employee-owned businesses. So we sometimes say the first generation of wealth should go to the entrepreneur who took the risk and stood the business up, but that the next generation of wealth can go to the folks showing up every day and driving value and continuing to keep the company thriving.
Awesome. Todd, tell us a little bit about you guys and AgWest, and the whole farm credit system is really unique.
Yeah, absolutely. My name's Todd Hatley. I'm a relationship manager, assistant vice president at AgWest Farm Credit out of our Salem, Oregon location. AgWest is a agricultural lending cooperative, and our organization at AgWest is part of a larger network called the Farm Credit System. The Farm Credit System was created in 1916 by Congress to provide reliable, consistent credit to agricultural and rural communities. So it's loans to farmers, ranchers, part-time farmers, agribusinesses, and cooperatives. And so AgWest is one of the around 60 organizations throughout the United States that provides these services. We provide lending, crop insurance, and then all sorts of hosts of financial workshops and seminars to really promote agriculture in the West. And then within my role at AgWest is I'm a loan officer, and so I work with about 50 different farms in the Willamette Valley of Oregon, with Blooming now being one of those, and we're super excited to partner with them.
Awesome. So Michael, for folks that don't know Blooming Nursery, give us a bit about the company, what brought A&H to the transaction, and sort of why is everyone so excited about it?
So like most of the companies that enter our portfolio, the owner was in her 60s and wanted to be able to retire. So she put her company up for sale, and we became aware of the opportunity. What was interesting to us is that Blooming Nursery focuses on high quality shrubs and plants for the retail market. They focus on quality. They are, and they have become a really established player throughout the Northwest, so especially Oregon and Washington, Seattle, Portland markets. They were founded in 1982 by Grace Dinsdale, a young woman who wanted to help save her family farm by creating additional revenue. She was terrifically successful. She has navigated the company ever since. Very proud of her accomplishment. When we bought the company, it had a little over $12 million in revenue. So that's a really solid small business, and about 90 employees that would swell during the growing season up to 120. So it's just a very exciting business. It is, however, a seasonal business. So it has a point in time where we look to Todd and his teammates at AgWest to draw money down to invest in the plants and to do the cuttings, to do all the work. And then all those plants get pushed out into great garden centers and retail outlets throughout the Northwest, and then the money rolls back in. So there's a significant cash flow issue that arises at a nursery like Blooming. But to sum up, I mean, we really appreciated both the owner's attitude, the workforce she had created, the family culture she had cultivated there at Blooming. And we just think there's a tremendous opportunity across rural America for enterprises like this to turn into employee ownership, I mean.
Absolutely. And so Todd, I mean, Michael touched on it. This is a seasonal business. This is an agricultural business. in doing this deal for us, it was our first ag deal. And so one thing we learned was that ag lending is very unique, very different. And so would love if you could chat a little bit about, what makes ag lending so different, why teams that are thinking about this need to partner with someone who really knows ag, and what gives sort of non-ag specialists a little bit of pause on the sector.
Yeah, great question, Phil. You know, agricultural loans are a fun and unique challenge. A lot of times we're not working with businesses that have a consistent cash flow model, which is what a lot of commercial lending is based upon. So, when it comes to working with ag loans, it's really important to, I think with any loan relationship is find somebody that's passionate about the business that you're working with and really wants to dive in and understand it and get into the nitty-gritty of, hey, how does this business work and what's the best solution that we can tailor to this operation? What makes ag unique is that there's down cycles in agriculture that are probably more prevalent than in your standard commercial and commercial real estate investor portfolio. And so, we really strive at AgWest to be even-handed, through the down cycles and through the up cycles too, and try to provide that resource of like, hey, like it's not just your business. We're seeing this as a sector, and when times are good too, we have to also remind a lot of our agricultural borrowers of like, hey, like now's a great time to build your working capital and to really invest and plan for the future, because we know that it's not going to be at this current level potentially forever. So it's just really important that there's another component to agricultural lending of, hey, like the market's going to change, commodity prices are going to change, input prices are going to change, and how do we accordingly react to that?
No, I mean, I think the shifts in inventory, the fact that this is live inventory that can go bad over time. You talk about ranchers. This is cattle that could get sick. This is and so hence all these insurance needs. I mean, it feels like a space you got to be pretty bought into to get into it. And so I appreciate you guys leaning in. Michael, you touched on it. This was also our first opportunity to work in a rural zone. And so would love to hear you chat about sort of why that was important for us and sort of what, you're thinking on the opportunity more broadly in rural America.
Well, A&H, Apis and Heritage came into existence because we thought broadly that employee ownership could be a way to help folks who so often have been left behind have a slice of ownership and therefore grow wealth. And that's our premise for every one of our companies. But when you look at where low income workers are concentrated, where poor health is concentrated, where the lack of opportunity is concentrated, it's often and increasingly in rural America. So we naturally gravitate to looking for businesses in rural America that meet our criteria because there's a terrific need. I mean, we all know the silver tsunami with aging ownership across the country, across the economy. Baby boomers own a tremendous number of businesses with tens of millions of employees, and they're all trying to figure out their succession plan. Most of them don't have kids who want to take over the business, and so they have to figure out what to do next. And for most owners, the only options that those folks have had, if they weren't going to hand it off to their children, is to sell to private equity or sell to a strategic competitor. And very often that has led to significant reductions in employment or concentration of the company somewhere else and moving it out of its district or its community. And when you look at rural America, so it's bad enough when that happens in a city, but in a city, there are a lot of other jobs. But if you look at rural America and you take a major employer out of the equation because they've been merged with somebody else, or at worse, it's gone bankrupt because of poor financial management, that can be devastating to a town, to a community. It's not a coincidence that a growing number of states in the US have agricultural commissions designed to figure out how to invest in and enhance rural America. And I would point out that 3 of those states who led the way were Wisconsin, Pennsylvania, and Georgia. So those have been in the press a lot lately. These are important communities that that the United States has to pay attention to and help. And we think that employee ownership needs to be a third option for those sellers who have a great business, but can't find that. A lot of times a seller in a rural community can't actually find a buyer. And those businesses just shut down. So we think that making employee ownership broadly available and easy, and making sellers and brokers and bankers aware of that is a big opportunity for us and a really important investment in our country and in our mission, which is to help close the racial wealth gap and the opportunity gap for low-income workers. So we're really excited to be in the space. We look forward to more. I will share, Phil and Todd, that about a week after this transaction was completed for Grace, and it was in the press, we had 3 calls from nurseries across the country saying, hey, can you come talk to us? Because I don't know what we're going to do, and we want to look at that. And I'll finish with this, and maybe Todd has a perspective. You know, we did find in this transaction that entrepreneurs and farmers have often a dim view of bankers and finance people. And I have to say, there's some rationale for that. I mean, here in California, where I'm based, a private equity shop bought the state's largest peach and plum companies and combined them and then drove it into the ground, and they went bankrupt last year. 5,000 people laid off. Imagine the US's largest peach and plum grower in bankruptcy. So I think there's a lot of suspicion, but I think when we can present an opportunity to sell to your employers or your employees for that farmer or that ag entrepreneur, it's going to be very appealing. I mean, look, we all know co-ops really were founded in rural America in some ways. And so it's a natural evolution. It's just been so difficult for most sellers to figure out how to do this financially and operationally. And of course, that's what we exist to do, to make it easy for them.
No, that's great, Mike. I appreciate all the context. And I think you got into it around like the importance of these transactions. And so, Todd, a lot of the employee ownership space, a lot of the emphasis has typically been on in the capital stack. It was, hey, we needed some form of seller financing, maybe some form of sort of mezz. But the big thing was everyone was using this sort of C&I term loans. And I think one thing that we found that was really unique about the ag space is, yeah, I mean, in the case of Blooming, there happens to not be a term loan, but it was the line of credit. And I think a lot of, and I think I want to spend a little time on this for like the investors, because I think a lot of people are like, oh, a line of credit is like a nice to have. It's a thing we use when things get tight or when customers are slow to pay or we're trying to kind of smooth out cash flow. But I think in the ag space, the line of credit is especially critical because of the high seasonality of the business. And so we'd love if you could sort of talk through how you all as an institution think about lines, a bit about like, why is a line so important in the space? How do y'all think about sizing them? And then from a, give folks a sense from a like coverage standpoint, any rules of thumbs that people that are out there looking at deals to say, hey, if your inventory and your AR is not here, or, there was whatever dollars and cents on the dollar of those two things, whatever it is, but just give folks some context on that product.
Yeah, absolutely. We still look at lines very similar to what, a commercial lending institution would look at. I mean, the basics of any kind of a debt analysis on a business is the balance sheet appropriately structured? Do you have sufficient working capital in regards to your sales, or working capital in regards to your turn times on inventory? Because working capital is like the lifeblood of a business. Then we start to dig into things like, what's the earnings, historical earnings on this business? What's your projected earnings? We kind of look at, margin of your inventory. What makes agriculture unique, and so for Blooming's is that, Blooming is a nursery, and so you're growing the nursery stock that you're about to sell. And so, and even within the nursery industry, Blooming is so much different than other nurseries that we work with. Blooming from from propagation to sold product can vary from 6 months to 12 months versus, like a shade tree or a pot and pot nursery that we work with. I mean, a coniferous nursery in Oregon, you might have a 5 to 7 year growing period. And so you're investing 5 to 7 years of capital into this plant before it's ever sold. And so, it's not feasible to always have enough cash on hand to get through that. And then even with, within the agriculture sector, I mean, a lot of commodities we work with, you're investing 12 months of expenses to get paid at one time. And so
Right.
you need to, you have carrying costs associated with your inventory. And so, I mean, some general rules of thumbs, we don't ever really want to see line of credits greater than 80% of sales. I think the sweet spot is generally 50% of operating expenses. But it just varies so much from business to business, and every single loan we write is customized to that operation, which is a unique feature that I think a lot of well-established commercial lenders can provide too. And then again with nursery, I mean, the biggest challenge with the nursery industry is how do you appropriately track cost value of inventory in the nursery? I mean, you might have tens of thousands of plants, and how do you appropriately spread your fixed costs across those plants, and how do you track that? And inventory is a huge beast on a nursery. And in the case of Blooming, I mean, they do such a great job, and they have great programs in place to make sure that accounts are reliable, costs are spread, and the better quality information you can provide the lender like me, I mean, the easier the job gets for us.
I got it.
To circle back to Michael's comments in terms of the rural communities, I mean, they're extremely important to agriculture.
Yeah.
For us, we live in rural communities, we work for rural communities, and the farms are in rural communities. That's where the employees live too. And so, we really try to champion agriculture, and we invest heavily into rural infrastructure and communities, and we donate millions of dollars every year because without the rural community, the farms would not exist.
Thank you for that.
That's
Thank you for
big.
that. I will say, just to tag on that, we at A&H have now worked across the country and with many different bankers, and they're great bankers. Each of our project senior lenders has been, terrific institution. But we did find, as we were going to market with Blooming, that AgWest and understanding agriculture, and especially that the inventory is alive, and maybe it's becoming more valuable, or maybe it's becoming less, but you guys understand that was really hard with a traditional bank. Like, it became very clear to us why there are ag banks, because it really is a unique sector, and tip of the hat to AgWest for being so competent and available, and really, earning the respect of at least Grace and her team. They think very highly of AgWest, and we're not super happy when we made some other suggestions of potential financial partners. So
Awesome. Well, Michael, with that, I mean, I think we've talked a little about Blooming. We've been in that investment now, I think, going on a year. Why don't you give us a quick update on where the business is, how it's performed so far, and sort of, what we're excited about?
Well, it is exciting. Bill, as you know well, when we make an investment, we think of it, for us, it's a 5 to 7 year investment, but we design our model to create 100-year companies. And certainly some of the advantages of employee ownership are going to be felt in year 10, 15, and 20 for employees. So year one, it's always a bit new, but I will say it's been very exciting. They're doing great work. They matched last year's revenue in the end of June of this year. So of course, the second half of the year is the slower season, but still, that's a nice achievement for them. I think the two things I want to focus on is that, and this is where I think we start to see the benefits of employee ownership, where you have an empowered employee base, and not all of the decisions on risk and reward are being made by one person at the very top. So Grace had built a great business. It was more than enough to support her and what she needed. And so she didn't have a lot of need or ambition to get bigger. But this year, what we found is having largely sold out the inventory, Grace assembled the team, her key lieutenants in each of the fields, and said, look, we've sold, actually, they were the ones who said, we've sold out. Why don't we grow more? And she hadn't ever really needed to expand before. But as a result of those conversations and their willingness to take on the extra work and risk, Grace leaned in. And so we now have an investment project that will put 4 more greenhouses and other facilities on the property and expand production by 10 to 15% is the anticipation. And I don't think that would have happened if we were in the old mode. So that's very exciting. And then the other is, again, with a little more ambition, Blooming has extended its markets into Colorado and Utah and Wyoming by hiring an additional salesperson. And again, I think that's what happens when you see a company become employee owned and then therefore a little more ambitious. How can we do more? And it's exciting, and Grace is completely supportive of it, but I'm not sure it would have happened if it had stayed the same as it was 2 years ago.
And then, Todd, I know we talked about how unique ag is, how unique each company is, and then of course A&H shows up on your desk and is like, oh, wait, we got this ESOP thing with us. I'm sure we know how hard it is to bring all that together. Would love to, I think this was one of your first ESOP deals as a lender. How did that factor into your analysis? How do you think about that? And give the folks some context as they kind of go out to try and bring others on board.
Yeah, this is my first ESOP opportunity, and it's been a huge learning experience, and it's been enjoyable. And I'm really glad that we had the opportunity to partner with A&H, and we built a relationship more than a transactional experience between your group, our group, and the day-to-day management of Blooming. And I think from my perspective, I just tried to approach this as I would with any opportunity to provide financing to a farm. And there's opportunity to provide credit enhancements that got us comfortable with the transaction. And I think what ultimately really sold me on this was when I was on the nursery with Grace, and I could see it in her eyes of like she really wants us to succeed. And I think that the ESOP structure also hits a pretty important part of our prerogative at AgWest, is that we have the Farm Credit Administration, overreaching, has this objective of increasing the opportunity for young beginning and small farm producers. And so through the ESOP structure, we are allowing individuals to become first-time farm owners through this ESOP structure. And these are people that would have never had the opportunity to own farm ground, to own a business. And really, this is an opportunity for them to potentially have a retirement in the future, which they might have not had just working on wage and living. And secondly, to that point, one of the biggest challenges we have looming on us is I think the average age of your farmer is like 65 right now. So succession it's going to be a huge factor into loans in the next 20 years. And so how do you successfully transition a successful, thriving farm business from one generation to the next? And in this case, there really wasn't a next generation. So how do we keep the continuity of the nursery going? And in this case, the ESOP structure seems to be working pretty well. But there's also risk to ESOPs, and we've had a lot of good conversation, and there's a lot of controls in there to help mitigate some of those, and a lot of good conversation of, hey, how do we look at this right to make sure we're seeing the same thing?
Oh, that's awesome. As we close, Michael, any thoughts for investors sitting on the sideline, curious about the space? Any sort of wrap up there? I think you sort of laid out the mission, but maybe a little more on the investment thesis.
Well, I think whether it's agriculture or manufacturing or essential services, it's important that A&H and other actors out in the employee ownership field make employee ownership more clearly a real option for sellers and for business owners. As I said, maybe I said it at a conference instead, but of the owners who came to us, none of them, they just put their business up for sale. They didn't have any idea about employee ownership. They just, we were one of the bidders, and then the thing is that we bid on the company. We say, oh, by the way, unlike traditional private equity, we're actually going to create an employee ownership trust and or an employee trust for the stock ownership, and your employees are going to be the beneficiaries of this. And every one of them fell in love with that idea. Grace told us later that she couldn't imagine selling to anybody else, and had she not found us, she probably would have died at Blooming Nursery, which is not a great retirement plan. So I think we need to make sure that people understand this is really an option. I read that private equity, the more traditional form, has put $10 billion into the ag sector over the last 10 years. I just don't think that can be the only route to succession for farmers, for ag workers, for rural communities. I worry if that's the only path to succession, because for most private equity, with a 5-year horizon to a profit that requires 2x or more in terms of returns in the ag sector, where, as we've talked about, it can be seasonal, margins can compress and then expand. It doesn't lend itself to a quick flip. And I worry about all that private equity moving into the ag and rural sector, and whether those both values and, frankly, just the business models are really aligned. So I think that we have a big opportunity. I think the employee ownership space in general has a big opportunity across rural America to help keep those communities healthy and growing and stable. So we're excited about the space, and look forward to working hopefully with AgWest and other great ag lenders across the country.
Awesome. And Todd, I'll turn to you for some closing thoughts, but I don't care. I gotta ask, like, what's hot in ag? Where do folks need to be? Tell us.
Yeah, I mean, I give kudos to A&H for picking nurseries, because boy, they have been on a tear the last 4 years now. That there's a lot of exciting things about agriculture, and I get the opportunity to work with hazelnuts and blueberries and grass seed and nurseries, and there's bright points and there's low points right now, and we're working through all those. And I don't know if there's anything that excites me the most. I think I get really excited every day to come and provide the opportunity to bring our financial experience and background to farmers that generally don't have access to capital or to financial information, and provide them a resource and really support them. And it's been a pleasure to work with. I've had the opportunity to work with your team, the nursery team. I've talked to the trustee. I mean, it's a fun experience. We're helping make a difference, at least in this nursery. And I'm hoping those investments compound and expand. And we would love to look at more opportunities with you guys too in the future.
Awesome.
That's great.
Well, look, both of you guys, I appreciate you all for taking the time. Appreciate all expertise. I think, for those watching, I hope this has been a good case study in what ag lending can look like and what ESOPs in rural America look like. I think we sort of laid out the case for why it's so important, why it's so critical. But I think the main takeaway you're hearing is there's real opportunity here, but it takes dedication, it takes real expertise, it takes collaboration among everybody. But when it works, I mean, there's something here. And so I encourage everyone to look into the space, reach out to AgWest, reach out to our team. Happy to share more. And so I hope everyone has a great rest of the conference. Thanks so much for attending, and we'll see you on the other side.